we got to talk about Morgan Stanley right now because shares of that company up more than 50% over the past year. The company recently reported strong quarterly earnings that beat on the top and bottom lines. Here to discuss all of that, the banking sector, the path of interest rates, the Davos vibe shift, and everything else. Ted Pick is here. He's the CEO and, of course, now the new chairman of Morgan Stanley. It's very good to see you, sir.
Thank you for having me, sir.
Okay, so we're all trying to figure out, and we've been sort of taking the temperature of everybody who's joined us, just what the level of confidence is and how much you think the feeling here in Davos is actually accurate. Because, as you know, oftentimes
the contraindicator.
It could be a contraindicator. So tell us what you think the feeling is, and then you can tell us whether you think it's a positive indicator or contraindicator.
Okay, well, I had a view on this, but the temperature here has dropped about 5 degrees in the last 5 minutes. So you got to factor that in.
You got to factor the temperature. Okay.
I think the temperature is mild and positive.
Okay.
And I just think the enthusiasm that is typically, people don't want to be exuberant, but I think there's definitely a fresh step to
Are you feeling
the
that? So I've heard that from a lot of the U.S. CEOs.
So there's
then
another
you go to Europe, and it's like
more
people
reflective.
feel like they're on the death's door.
No, I don't think it's that. I think it's a reflective moment. There's been talk about capital markets and banking unions since, again, the Draghi report of the fall, which everyone read, but nothing happened. And I think the new administration is a catalyst. Catalyst is we should really talk about where we fit in the global community and what the new framework is. And I think there's the beginnings of a real discussion. So I think, in a sense, it's positive. Now, there's some folks that say Europe, the negativity is such that maybe the assets are available and there'll be activity. But I think in the short term, what's more important is that we're thinking about what's going on in the U.S. And clearly there's a sense of greater connectivity of the business community to new administration and
what about
positive vibe.
How do you think about given you own E-Trade, how do you think about the equity markets? I mean, are they priced to perfection? You look at some of the PE ratios and the like, and you're like, this is pretty high.
Right. So the index looks pretty full. But the reality is we've been talking about growth. And so you really have to not look at the earnings we've seen, but the earnings we think we're going to see over the next 12, 24 months. That is kind of the indicator. And the earnings continue to be strong. How many companies right now are really talking about recession? If anything, they're talking about inflation. So I feel like the earnings pull-through looks pretty sanguine. But more importantly, I know we like to look at the index, but the index is dominated by the half dozen technology companies, which, by the way, are all doing great. But if you look at the deregulation possibility in the energy sector and the financial services sector, those sectors are still at multiples that aren't actually that expensive. So I just think in the sort of, if you're an investor and you think about allocating over the next 6, 12, 18 months, maybe, sure, there could be a drawdown at the index level, but you really want to be thinking about where do I have sector exposure?
And what about country exposure?
Country exposure matters too. I mean, I think the two themes, Andrew, right now are kind of the end of financial repression I've talked a little about, which is sort of zero interest rates, zero inflation. That's behind us. And whether we're going to have one or two moves by the Fed this year or none at all, we kind of know where we are in the bond market, somewhere around 4.5%.
Do we, though? Because there is real questions about, we're going to hear from President Trump this afternoon about tariffs. Jamie Dimon was here. Mary Erdos was on stage talking about how they're building war rooms at J.P. Morgan to sort of analyze these executive orders and what's going to happen with tariffs, both for the clients and the firm. I don't know if you have war rooms.
No, we all got them. But I think what's important here is that in the broader context of the post-pandemic period where we're trying to figure out what rates would generally be when we had a roof off the back of the inflation burst, we know for this moment, for the next period of time, we're somewhere in the fours on a risk-free basis. And as you know, if you're an analyzer looking at a portfolio company, you're a private equity sponsor that's sitting on 2,000 companies. As you know, they're out there each worth $1 billion or more. They want to move them. So what's been one of the arguments not to move them? The argument has been the uncertainty around rates. So I'm not saying there isn't rate uncertainty at all. I'm saying we're kind of have that in a box. And the second box, I think, is kind of the end of history, which is we're going to have nation-state rivalries and interests. And you could argue, but isn't that a chilling effect too? And I would argue, no, actually, if you have the combination of some certainty around general rate framework, and you know now that there is going to be discussions at the nation-state level, well, gosh, I have to act then. Am I going to be a buyer? Am I going to be a seller? Am I going to do some financial engineering? And that's why I'm bullish on the M&A cycle. I know some folks are still wondering, like, when's it coming? And there could be a pacing of that. But I feel like it's those two coming together, zero behind us and, kind of the global race in front of us, that breeds M&A and capital markets activity, which is great for
Given the
Morgan
confidence
Stanley.
you're talking about, there is an animal spirits situation going on in the markets
Yep.
right now. You have a wealth management business. E-Trade obviously is a big part of that, so you got the retail side of it. What do you make of crypto under Trump, this Trump administration, what may happen and what that speaks? I mean, we're talking about meme coins. I don't know if you're following the Trump coin or the Melania coin and what that says about what's happening here.
Well, I think there is liquidity, and the liquidity, expresses itself in all kinds of different ways. I think the broader question is whether some of this has come of age, whether it's hit escape velocity. And, time is the friend. The longer it trades and, perception becomes reality. For us, the equation is really around whether we as a highly regulated financial institution can act as transactors, sort of follow the money. And there we'll be working with Treasury and the other regulators to sort of figure out how we can offer that in a safe way.